What is up, guys? Welcome back to another episode from Coin and Capital. It's Chris here, and I hope you guys all had a great holiday, whatever it is you celebrate. Christmas, Hanukkah, don't celebrate it, whatever. I hope the time was spent with some family and some loved ones. You know, we took a little break for the holiday, but we're back. We are back, and boy, did stuff happen this week. You know, it's year end. The banks are looking to close up the year with good looking balance sheets and whatnot. And this has brought about some market behavior. So today, guys, we're going to talk about precious metals, what is going on with gold and silver, how that relates to China. We're going to talk a little bit about some mischievous market maker behavior that caused gold and silver to plunge like 5% on the day. We're going to talk a little bit about the US plumbing, what's going on there. And then finally, guys, we are going to consult the most free market asset in the world. We're going to consult the Oracle. Yes, we're going to look at Bitcoin and see what it has to say about all of this. So strap in, ladies and gentlemen. The charts are coming. Let's get right into it. Kicking things off with the precious metal frenzy. You guys have been sleeping under a rock for the last 4, 5, 6 months. If you guys haven't even been tuned into the markets at all this year, guys, even my uncle with no social media knows what's going on. He trades antiques and he's texting me, gold just hit this amount, gold is 4,000 and now it's silver $70. It's crazy. So what's going on? Well, the first thing I want to talk about, the first narrative I kind of want to float up to you guys and discuss openly. Maybe it's a good one, maybe it's not, but here we have the 10-year, the US 10-year as the white line overlaid against gold. Okay. Now, what is the US 10-year? The US 10-year is a financial condition metric, right? If the 10-year, if the yield is high in conjunction with some other factors, then we could say conditions are tight, right? Like the yield is right now. The only thing offsetting that is the dollar, right? That's another financial conditions metric. So yields are high, which usually means conditions are a little on the tighter side, which means it's not the best environment for gold and debasement hedges, inflation hedges to react positively, right? Because people would much prefer like dollar assets, right? Safe yield. However, with this yield, with the 10-year yield being where it is now and having gold rip, what could we derive from that? Okay. One is that gold leads financial conditions by some months, perhaps, right? So gold could be pricing in a more inflationary regime to come, which makes sense given the situation the US is in, right? Or two, gold could be currently pricing in the excess liquidity that is being added and the inflation that is soon to come from the current schemes going on in the US plumbing and around the world, right? Another narrative that has some merit to it, which we'll talk about in a little bit, is going to be these nation states, foreign states, China, other people looking to diversify away from the dollar and hedge against dollar inflation. And so far, guys, they're doing pretty good. Gold is up 60% a year. Along with silver, also doing incredibly well. Okay. Silver is up 150% this year. Insane, right? GG's if you bought gold and silver. You have outperformed me this year. That's for sure. But this rally hit fever pitch. Believe it was 27th, 28th, right? 26th. Just a little bit after Christmas. Okay. And then everything just like mass liquidation happened. Okay. It plunged about like 2, 3, 4% in both gold and silver. So we have this article from Investopedia. Gold and silver prices plunge Monday after last week's big rally. Here is why. And then this article goes on to talk about some very mischievous market maker behaviors. Okay, so CME, a big futures exchange in Chicago, the biggest futures exchange for commodities like gold and silver, okay, raised their margin requirements by 30%. 30%. Are you kidding me? That is like forced asset forfeiture, right? Seizing of assets, right? There. What happened? How is that allowed, right? So for those of you who don't know, margin is like posting collateral, right? So when you raise your margin requirements by 30%, you either have to unwind a bit of your position, right? Or your position gets liquidated, or you need to post more collateral. And on the 29th, two things happened. Everybody got liquidated and people exited their positions to cover their margin. Now, a 30% raise in margin is insane, especially after a holiday. Think about the psychology here for a second, guys. Okay, holiday comes, people have money, excess cash flow, all of a sudden, because it's a holiday, everybody's in a good time, a little drunk, time to play some gold futures, see if we can hit it big, and the next thing you know, you get margin called because head buddy at CME decides he wants 30% more collateral from you. But wait, you don't have that because you're max long gold futures. So therefore, they take your contracts and you're dead broke. Welcome to the arena, guys. But there is also a geopolitical aspect to this precious metal game that we need to talk about, right? It's not just because some cucks at CME decided they want more collateral for retail futures. There is a larger game at play. And we've covered this larger game at play in past videos, okay? We're talking the US versus China, right? Digital versus analog, pro-manufacturing, right? Trying to reshore their own manufacturing because they offshored it to China 40 years ago. And now they realized it's a national security threat, right? That is the game we're talking about. So the Chinese chokehold has reared its head yet again. Another move on the chessboard has been made, ladies and gentlemen. So this was an article from the World Gold Council. Sounds official, right? Let's just take a look at some of the highlights here very quickly, okay? Talking especially the bottom two, where Chinese gold ETFs have seen major inflows, as well as the PBOC on their 13th month in a row buying more gold. What is going on, guys? Perhaps the PBOC, People's Bank of China, the Chinese central bank, is foreseeing a regime in the States where real rates are negative, so you no longer make money on your debt holdings from the US, and where the dollar is weakening against other foreign currencies, and where the money printer rules the world. Okay, China doesn't like that, right? China is taking precaution. They no longer want to deal with the US, right? Who wants to deal with a nation that's $37 trillion in debt? Not a lot of people, right? China especially have decided to diversify, right? They have been dumping US treasuries for the last 10 years. We've talked about that, and they have been replacing it for a sovereign hedge against dollar debasement, which is gold. Okay, this is this is a contributing factor to gold's major run this year, right? And it's not just China. Central banks around the world have been stockpiling gold yet again. But how does this relate to silver, right? How does this relate to Buddy at CME margin calling the entire globe? Well, you see here on December 29th, okay, from this opinion piece, this is a Western take on some recent news from China, right? It's one of the only articles I could find that was not in Chinese. So the wording is a little strong. However, the point still remains, okay? Opinion: China launches its silver weapon on January 1st. what that means for investors and prices. Okay, we've talked about this on the channel as well. China is playing the game of export controls, okay? Protecting its manufacturing base and making it extremely hard for the rest of the world to, well, the States mainly, to access its manufacturing power, okay? So first, there was something to do with chips, right? And that nuked the entire European automotive industry within a day, okay? Now, they're cracking down on silver and rare earths. So China has put more export controls on silver starting January 1st, okay? Making only a select few companies, people in China able to export silver, okay? Tightening supply potentially, okay? Something to watch out for, right? Adds a little risk to the environment again, right? We saw how volatile markets were back when Trump and China were going back and forth, right? Markets didn't like that. We could be facing another few weeks of turbulence here in the future, but we can see silver definitely doesn't like that now, right? Off the rally with the margin calls and then export controls from China. Chop indecision. People don't know what to make of it, okay? I think it's just another move in the chessboard for China to protect their manufacturing base nonetheless. Why do they have to do that? Well, my friends, why China has to protect its manufacturing base and wage war on the U.S., the proof, my friends, is in the plumbing, okay? To the right, SOFR, overnight lending rate, okay? Remember, when that spikes, there is trouble in the market, dysfunction in the money markets. When it spikes, there is not enough liquidity to take the other side of these auctions, okay? So, if there's no money to take the other side of the auction, right? If the banks are broke and don't want to buy, well, my friends, the Fed started reserve management T-bill buying, market framed around $40 billion a month near term. And Treasury official, they resumed cash management buybacks in December 2025 explicitly to smooth bill auction sizing and market function. No wonder China doesn't want to deal with these guys, okay? So instead of producing real goods and value for the world, okay, like the US used to, remember they used to before they offshored to China, instead of doing all of that, they have relied on money printing and hyper-financialization, okay, to support their debt refinancing. All right. No wonder, right? No wonder the globe does not want to deal with that, okay? Because as these money printer schemes go on, as the liquidity smooths over this dysfunction, the dollar gets devalued, right? Rates become negative, and you lose real time in whatever debt instrument you're holding from the US. And now, why did this SOFR rate, why did the overnight rate spike all of a sudden, right? We know there was not enough liquidity, but why at the end of the year? Well, my friends, the banks need to dress their balance sheets for year end, okay? They need to look a certain way to pass requirements, meaning the banks tap the Fed liquidity tool amid year-end pressure, okay? Here on the right, we have the reverse repo facility shot up to $20 billion and is now dwindling down. That means the banks were $20 billion short year-end, okay? It's insane. It is insane, guys. The way this fiat money system works is insane, right? Because in order to issue new currency, the debt must expand. Therefore, the fiat currency can expand. Therefore, the debt expands. It's insane, okay? So the banks didn't have enough money because they're too levered buying U.S. debt, so they need more they need more leverage to buy more debt so their balance sheets can look good so they can buy more debt. And it's just, oh my God. Okay, this is the world we're living in. No wonder China said, screw you guys, we're buying gold. But that is enough doom and gloom from the plumbing side of the US. What does our good friend Bitcoin have to say about that? Well, on the 29th, when this dysfunction occurred, when the SOFR rate spiked up, Bitcoin sensed it out. Okay, this candle highlighted it in white, and the white box was December 29th. Okay, we know Bitcoin is the ultimate truth machine, the ultimate liquidity signal. When Bitcoin is down, there is not much liquidity in the system, and it reacts spotless to that. Okay, dysfunction in the treasury market, Bitcoin trades down. Perfect. Bitcoin is working. Bitcoin shows us the truth. Next day, nice green candle got printed. Liquidity got added. 20 billion in repo was confirmed. More liquidity added. Bitcoin priced accordingly. Well, my friends, that concludes today's episode. And what did we learn from today's episode? We learned that gold has the potential to price future financial conditions. There was some sketchy behavior at the CME exchange, margin calling, requiring 30% more margin, which crashed the silver and gold market. Okay, silver has now been included in export controls in China. China is still waging a trade war against the US. We just don't hear about it because they don't want us to hear about it, my friends. Meanwhile, gold is still catching that debasement hedge bid. And in the US, plumbing issues, liquidity is scarce right now. Okay, before they need to do the big print, there's repo operations, there's balance sheet operations. They are band-aiding it, they are patching it over as best they can, and Bitcoin senses it. If you guys enjoyed today's video, make sure to drop a like, subscribe, comment, all that good stuff. I'll catch you guys in the next video.